were to cast shadow, maybe 2-3 years ago, inflation was quite high. The reason why inflation was quite high, it's because of low production that we have actually been learning against, that aspect of fighting for growth. And what we have seen over time that from 2022 up to 2024, the Bank of Zambia has been fighting to curb inflation, in the process stifling now the credit basket, meaning the interest rate have not been able to be freeing up to make sure that we can learn production at high scale.
Okay.
So that aspect of constraining the interest rate has given shape now to some levels of stagnated growth pattern, which we have experienced over time. But with the current situation, of course, the inflation went as high as 16.7% as the highest. Of course, if you are to go down into maybe 2021, inflation was at 24%. So it has been going downward until it has reached now a single corridor policy target, which we have seen now with the 7.1% as we speak in this particular month. So meaning what we have done is the issue of trying to cool down some effect in the forex market. We have also improved on food supply. We have also worked on the tight monetary policy structure, which is now balancing up between growth and controlling inflation. Then we have also seen that the current situation is not lying in the opposite direction compared to previous years' performance in terms of key factors like food and many other aspects, which are also basically non-food inflation component as well. So overall, what we have seen with inflation, and even the case right now as we speak, we've got a largest component which is actually sitting as the largest weight on the food basket, that is food aspect of it, where we are seeing now harvest almost nearing, and we have started producing some fresh stuff like soybeans, maize, and many others are the ones that have actually now compromised to the situation that we have seen with inflation dynamics. So what we see basically working today is that because of being near harvest period, obviously we are anticipating to have almost similar to the same pattern of agricultural output, meaning what we see working out is that we've got maize in abundance, and also we've got a number of other key commodities that are supposed to be put on the table, which will be able now to cushion that effect which we have seen. So in the Zambian case, the biggest inflation component is food. And this is where it now eating so much to a point where we have got now a demand seasonal aligned positioning. So the market is balancing with what is happening right now. Maybe if we can also look past harvest, we need to make special contentment measure, especially when it comes to storage and post-harvest activities. If we basically do that, then we are going to contain inflation.
Understood. Now, there's the reduction in inflation, quite right? But you've explained the impact on Zambia's economic growth. But the truth is, poverty rates are still high. And this is the concern with a lot of Zambians. Zambians can barely afford the basic requirements. So how does this, and maybe I'm trying to use as simple language as possible. I told somebody, if you were to explain inflation in the simplest way, they said it's the increase in prices slowly, even if you've reduced the amount of inflation. So this reduction from 7.5 to 7.1, 0.4%, how does this directly interpret into what the consumers are buying?
Okay, so what is basically interplaying with this inflation mechanics is that we are not going to have sharp changes in the pricing structure. Meaning, if you bought a bag of mini meal or a pocket of cement or whatever it is that you could have bought in the previous times, or even just as we speak this week, where inflation is actually totally around that figure or that margin, meaning even the next few weeks to come, you'll still be able to have that prediction in the business circles. From the business perspective, meaning we are not working out with raw materials, you won't be able to jump your pricing projection in terms of your operation aspect. Then in terms of the household effect, we are going to contain the disposable income, meaning even when you are paying for for bus fare. In the next few days to come, it won't be able to change in any way. That's a effect which actually happens from there. You know, inflation, when it is jumping up and it's not stabilized, what will happen that each and every week you'll be experiencing some price changes, which will affect your pocket, which will affect your income, basket. So it's from that basis that we should be able to see that inflation works also from this point. What has also made the whole scenario to be in this way, it's also because the forex market has been stabilizing, meaning even the imported inflation is being limited from there. So what is basically plays out with inflation that you'll be able now to have more planning modality, and also in terms of business, you have more focus in terms of trying to, bring that sense of sustainability. If it's even the issues of maybe fuel, we'll be able now to have a security of supply, which will be constantly from that perspective. And again, if it was an issue of geopolitical tension, which actually happened, obviously you understand that if you were to flip back into February, when you look at the performance of the Kwacha, maybe to link it to inflation, performance of the Kwacha was standing at 4.5%, meaning even as we speak in this month, we have received almost closer to the same figure. The reason why, because we had reduction in fuel. And fuel has also sustained that element, meaning what we are seeing sitting on the table here is that the strong copper output production and forex market are supporting each other. So we do not have stress levels with these two fundamentals. If we happen to have, then it will become difficult for us even to see the inflation tutoring downward. So what we see is a strong contentment because we've got strong fundamental factors holding up. And even when we look at the fuel aspect, just after the ELB reduced 5% for this particular calendar month, we had Iranian war which erupted, but luckily enough we had a stock which was quite strong, health in particular, where we are seeing that we had about 60 days of operation cover for diesel. Even if we don't seem to have so much on the petrol, but diesel covers both transport and industrial activities. So that is the reason why we seem to have now sustaining some key elements right now as we speak. But suffice to say that coming next cycle review of fuel, we are likely to uplift inflation because we'll be able now to have some bit of price growth from there. And the fuel is an immediate inflation triggering influencer, which will be able to be seen from there. So you see the pattern of performance this month is quite conducive, it's good, and it's going downward. But come next month, you'll see that inflation will change because already the fuel has been surplus, meaning we could not uplift the fuel pricing comparable to global market dynamics because we had health stock, and also Kwacha has been healthy, and also copper has been healthy. So all these factors have actually been holding up. Now, the scenario is if we had multiple stress factors align simultaneously, like for example, oil shock, weak copper, and also policy leverage. All these three are already negative. If they are negative in that force, then you should have received inflation to be triggered from that point. So what is basically even doing heavy weights right now in terms of inflation? It's food inflation.
It's food inflation.
Yes.
Before we just unpack a bit more on food inflation, there's external factors such as climate change, which we can't ignore, and also international policy, right? How do they directly impact inflation, the inflation rate, especially here in Zambia?
Okay, so the context is that we are good with the international policy because we had to navigate through, and by the way, Zambia also went into a multipolar currency system where we're talking of Chinese currency also coming into interplay into payment of tax receipts on mining sector, which is occupying about 15%. Then we have sustained the dollar at 60%. Then we have also made the Kwacha to sustain at 25%. So that dynamic has also given shape to a position where we are now sustaining the good performance with the forex market. So now, if you look to maybe just flash back into early next year, early last year, we are seeing the changes that took place with the U.S. president. That already affected our situation, but not to the extent of large quantum, because obviously we depend so much of our primary source of flooding in the Asian market, particularly China consume a lot from that point. If we take copper to US, it's a small proportion, and it takes through the proxy supply. So if our direct importation of copper into US would have been larger, then we would have seen the effect. But again, also with the aspect of foreign policy, if we do not work out on the policy we inclined to regional markets, then it becomes difficult, because that will find overlapping factors with our export promotion aspect. So again, if you also link it maybe to the other part of what you mentioned, the issue of inflation. Obviously, we are talking of inflation to be tutored with an aspect of, for example, if copper as a situation where there is a delayed supply because of some policies that are being put in place somewhere, it becomes difficult, because copper is what's supporting the forex market. So you can even imagine the external market is quite very sound for us, giving that quantifiable effect in terms of the forex market performance. Otherwise, what is basically happening is that if we tend to actually have any situation that can be consequential in the foreign exchange market, especially on the foreign exchange side of performance, that will be able to transmit quicker. Even the inflation itself, as I mentioned, maybe I would say inflation that passes through foreign exchange market is also very aggressive and sharp. So imagine our exchange market is supported from the external market. So if there is an inflation that is coming through important inflation, that acts as an aggressive appeal as well to the structural performance of the local market. So it's quite related to the key fundamentals. But again, also, if you look at the whole scenario of food inflation, versus the foreign market inflation. The foreign market inflation, transmit throughout the time, because we interchange all the time from January to December. But the food inflation is only seasonal. It comes only from maybe starting from maybe February up to somewhere like August. That is when we can actually enjoy the food inflation. But otherwise, with the forex market, it's through all the times.
The target for inflation by this government has been 6 to 8%. We are currently falling within that gap. But again, as you've mentioned, there's concern over food inflation in the coming months, considering all the other factors such as fuel and just what is happening with the Iran war, despite government giving some levels of reassurance. What other things can the Zambian government do to be able to maintain this 6 to 8% target?
Well, it goes with an aspect of ramping up local production, meaning we need to trigger factors around agro-processing system. We need to make sure that we promote local industrialization processes, especially value addition, because we have not been doing value addition in most of our products, particularly from the primary source sectors. So we need to gravitate a lot of energy into that. Then we also need to make some strong contentment on certain policy instruments, especially when it comes to policy bordering on energy. We need also to ensure that the energy basket or energy balance sheet is also coming with that good effect as well. Because what we have seen also working out in the essence is that as long as we do not sort out the problem of energy, the inflation will have a strong resurgence. So it's important for us to make sure that energy is put light on our chest. And again, the issue of balancing up between growth, which is required, and also the inflation. These two elements are quite important to actually be able to sustain the current stability balance. Then the issue of also making sure that we have strong contentment during election time. We are dealing with the balancing the budget and balancing the ballot. So it's important that we need to see how best we can work out, key factors around this, especially this particular year.
What do you mean balancing the ballot?
What I mean by balancing the ballot, obviously, people that are in power. They
Right.
want to sustain power.
Got it.
Yeah.
Got
Then
it.
people that are also looking forward on the proper implementation around the budget, they also want to make sure that the budget does not breed deficit. So it's important that we need to have that act of balance so that we do not take ourselves backward. Because what we have built so far with the IMF template, we have made it very important for us to actually see that going in the future, we'll not be able to have a sustainable debt contraction. So the baseline that Zambia has now made in public finance management is quite sound. So we need to maintain this. And it's important that we can also maybe look at other alternative source. Of course, there are innovative sources like, inviting foreign-based, participant into local bonds. Obviously, yes, that's a innovation that is taking place, but again, that is not sustainable because it has got excellent risk factor. At some point, if we seem not to have good appetite commanding with this demand, I think it can also reverse our gains from that perspective. And then you got a debt war that we are also servicing this year, which is almost, I think, about 16 million Kwacha or billion. I'm not sure. I just need to correct the numbers, but we've got something that we are substantially servicing this year. So that's the reason why there is that drive also to see that the foreign participants are also basically playing that part, so that we can make even lower of some debt instrument as well. So what I'm trying to say by and large here is that we've got a very powerful microeconomic balance, which is actually speaking into a lot of good fundamentals. Especially the year has started with a very sound and good convergence in terms of key factors. Kwacha coming in positive, inflation going downward. So a lot of these good things, so we don't need to disturb these things. And we need to make sure that we contain so that we can start now postering good elements. Then the issue of policy or tax holidays which have actually been slapped on MFEs. I think that is a very, very right move as well, just to stabilize everything from there. Because obviously what we're trying to see is that Zambia need to activate industrialization through that process, because it's got two levers. One, we're trying to activate industrialization. Then we're trying to work also on the aspect to do with the export competitiveness. And then we're also looking at a lever to support SME to interlink into production and the supply chain from that point. Then the key factor is job creation. We need to look at this. Already we are talking of MFEs creating about 20,000 jobs, investment of about 5.6 billion US dollars. So that already speaks of something good, meaning we need to continue with this trend.
That's understood. When can, I think for the average Zambian, the main concern obviously is food inflation. We want to get back to a place where we can afford our lives. When are we likely to see a situation, Mr. Tsanga, where the prices of things are really good and the inflation that is talked about, the drop in inflation, actually reflects in how our pockets apply themselves in being able to acquire products and services?
You see, the cost of living is something that has been of concern, highly, actually, if I may put it to say, because obviously we have made a very vibrant stance with the macroeconomic stability. Obviously, speaking those lines, we are speaking of a very good conducive atmosphere for investment interplay, meaning the more we get to find this environment, the more we get to fine-tune some of the overheating factors, we are creating an ambience for growth, meaning there will be investors who will be able to come and start triggering production and also involve into job creation from there. So what we have is a situation where even when it comes to the Zambian side, I think it's important that as Zambians also we should look at opportunities that are presenting. And much more, if you look at the government intervention in terms of policy and governance, we are talking of issues of one, creating credit guarantee schemes, which I believe Bank of Zambia will start working out something in that regard. And again, we got an independent Zambia credit guarantee, which is also there just to de-risk some of the, capital stock issues. We've got a very conducive atmosphere also in terms of how the interest rates are moving. Because you see, when you trigger inflation downward like they were doing it, it gives more room even for the Bank of Zambia to come and cut down the interest rate, meaning we are still walking in a very fine route or pathway which will be able now to give that substantial positive development. So we are still standing to have a number of good things from there, though the pass-through effect of benefit takes a bit of long time. And expect that we've got even now risk factors that are standing like geopolitical risk. We're talking of also election. Election is also a risk factor in this case. So it also depends with how you navigate some of these risk factors that are standing right in front of us. If we can find some basement of comfort, we'll be able to see that definitely soon after election, or even just in early next year, we should be able to see some of these things ticking down. The biggest factor here that we will have a substantial effect that will also take place with food production, but we don't have so much of production going beyond, meaning we'll not be able to have processed food most of the time. So some of the food will be triggered to go to waste at some point. So that's the reason why we are now creating that environment to say, can we get industries, can we go into processing? With that aspect of mind into processing, we'll create more jobs. And that is what we have actually been doing. When you are exporting raw materials outside there, you are exporting jobs. When you are processing goods and export outside there, then you're creating more jobs. That's what we should be able to look at. And that's the best way and the model we should be able to see working closely with us.
There's been a justification. I understand we're talking about the fact that if we're exporting a bit more, we're exporting more jobs, right? But the Zambian government recently did announce that we will be going into a 24-hour economy, right? And that will allow for another opportunity of more jobs, despite us, and I agree with you where you do speak on value addition, and that's something that's very important. But how can we tie this with the 24-hour economy and still being able to achieve this good outcome that we are hoping for?
I'm liking the conversation. It's like you're in the spirit. Basically, when you go into 24-hour economy, it basically tells you to say you're running on continuous productivity. Imagine the time that we just go sleep. And sleeping has got its own way. Zambia sleeps, so meaning the economy won't be able to sleep now. There are people that are still working even when we are sleeping, most of us, but now opening it up now to almost everyone, that gives a breather to double the size in terms of GDP profile, meaning we can actually even match up even the key fundamentals that we were working against, especially when you look at the population growth. Our population growth is growing around 3.2%. Obviously, our growth in the past year, we have been averaging about 4.55%. So meaning we can double the population growth, meaning what we'll be able to do if we base not inside population growth, but double the size of the GDP profile, meaning we can now even match twice the number of population growth. And what we are going to do in the case that it's actually liberate a number of good things, because you can imagine you are able to work in the night, somewhere, and then in the morning you can go. It also depends with how we're going to manage your stress levels. But the bottom line is that once we open up the 24-hour economy, it gives that vibrating energy, even just for the economy actually to do a lot more, especially when you are looking at modernizing a number of key fundamental aspects, and it brings that positive transition for us to actually match up with the demanding nature of goods and supply factors out there. And again, it's also cause to say that as much as we are looking at it, it's important to look at security integrity as well. Ensure that we have the best way we can work out on the security integrity matters. And the other aspect also is just to look at it from the SME will also be able to double the size of what they make in terms of profitability margins and many other aspects. So it has got more quantifiable effect, but also we should also look at the risk factors. So in essence, it's both a golden opportunity and a risk factor, but it also depends on how we're going to take it up. It's a good thing that to match up with the emerging economies like Japan and many others, even including advanced economies. So meaning we are just positioning ourselves into something that is quite important. Tanzania is doing it. Obviously, Ghana also have done the same thing, and many others are doing the same. So it's something that will be able to lie in pair with our trading partners across the region.
As we come to a wrap, Mr. Chisanga, what are some of the lessons that stand out the most from the past that I think can be applied now to make sure that we stabilize our inflation rate, and also how can the private sector be able to support the efforts that the government is making to be able to just maintain the inflation rate?
Yeah, I think an open door policy, it's there. I just need the full participation of the private sector, and also ensuring that government support those that are basically doing production locally in the market. And then we need also to look at how best can we, serve certain effects, especially when it comes to fuel in particular. Keeping a stock of about 15 days, it's not something that is sustainable for this economy, because it's like we're just trying to do what I call just in supply demand. What we need to do is to have a 90-day monthly support, meaning what we can do is when we have a 90-day monthly support or even month support, it basically gives you a shape to say you are able to predict your operation cost. Imagine you are running a poker here as Crown TV. Every time you want to go wherever you want to do to cover your stories, obviously from month to month fuel has been changing. So the cost center on fuel is something that is not predictable, because the fuel moderating aspect of fuel calculation or reviews, they keep changing from time to time. So we need that environment where you can predict to say in the next month I'll use so much. Even if there will be an increase, it will be just like a small increase. So that is what we need to do, experiment with that aspect. So now it calls for a private sector to invest also with government together in a PP model to have storage facilities. That is key number one. Then number two, I think government also should be open enough whenever they are facing challenges, especially when it comes to food production. Obviously, issues of engaging millers, engaging food handlers, operators, I think it's important from that perspective. And even just us from the private sector, I think we need to also keep helping government in terms of making strong involvement into business activities and operations, so that we can also be able to pay taxes that are required to be paid there. So the compliance aspect should be a two-way factor. When ZRA pounds on you, I think that is a wrong way. They should come in and tell you to say how can you make you go with the tax compliance, as opposed to intimidating you or enforcing you. There must be that friendliness in compliance. So those are issues that we need to be, and also voluntarily from the private sector, you go to ZRA, have a sit down and maybe speak with them, tell them your challenge, agree how you're going to pay and all that. Just have that freeness of some sort. I think that is what is required, as opposed to pouncing on each other.
All right, thank you so much, Mr. Kelvin Chisanga. We appreciate you taking time to come through and just give us more insight.
Thank you so much.
All right, I've been speaking to Mr. Kelvin Chisanga, who is an economist and has just given us some more insights and understanding on the inflation rate, which is currently at 7.1%, which dropped from 7.5% in February. We'll continue with more of the Royal Breakfast Show after this break.